Awesome, and we're live. So thank you very much for joining this afternoon. Never has VAT and tax been quite so important to everybody in terms of what the direction is and what's happening, and you know, whether or not I can order things from Europe and am I going to get stung with bills on the import side. So today we've got a session with Retrade. We've got Mark and Gabrielle who are going to try and help demystify everything that's going on at the moment and everything else. Now, normally in the last few sessions, I've been talking about the cricket, but I'm going to skip over that this week. So for anybody that's been following that, you know why. And with that, I'm going to hand straight over to Mark. Thank you, Mark.
Thanks so much, Ollie, and good afternoon to everyone. Just firstly, a thanks to the Cambridgeshire Chamber of Commerce for hosting the webinar this afternoon, and for all of you for taking your time on a Thursday to hear about that. So hopefully we can answer some questions. The aim of the talk today is just to go through some very high level information around what's happening with Brexit and VAT and trade, obviously, plant some seeds into everyone's minds. There might be lots of questions down the line, and we'll hopefully answer some of them today. And obviously we can address those in more detail later on, but definitely just to think around the difficulties, things that people are reading in the press, etc. Hopefully we can unpack and really answer some of those and maybe dispel some of the myths. That's something we'd hope to achieve as well. So my colleague Gabrielle Magnani is an import VAT consultant and indirect tax specialist. Myself, I'm an accountant, commercial operations manager for Retrade, powered by VAT IT. And we have a solution that assists businesses around their VAT compliance and the entire gambit of the trade process and supply chain management, really to understand what that import VAT, what are those VAT incidences, and the compliance checks that need to be done currently post-Brexit. So we'll begin with just looking at the agenda. So Brexit's impact on trade and VAT, obviously, the topic of the day, and some high-level discussions around, just to sort of set the scene around Brexit and the free trade agreement, and then how businesses can pivot to continue trading. So what are those actionable steps that companies and yourselves can take ASAP, and then how to overcome some of those supply chain challenges, and then really the sort of solution that we could offer, but just touching on the things that businesses need to think about now that we are and have left the European Union. So just we'll kick off with the Brexit's impact on trade and VAT. And then just a very high level, and I think maybe everyone's sick of hearing about Brexit at the moment, but this is the topic at hand. So obviously, the single market created in the 90s, 80s into 1992 allowed business to enjoy the free trade between the UK and the EU as a member of the EU. The UK obviously being one of the push countries for the creation of the single market, but essentially it did eliminate the administrative burden of customs, tariffs, import VAT, and trade into the EU. Importantly, obviously, considering that the UK trades about 171 billion pounds a year worth of equipment, manufacturing, chemicals, those big industries in goods across the EU to the EU, and that's a significant portion of the EU of the UK's trade. So being outside of the single market and customs union has really added a lot of costs, a lot of administrative burdens, which we'll unpack later. But it's just thinking around those. So how do businesses start to prepare, or have they prepared, or are in the process of preparing for this post-Brexit environment that we're in? But of course, the biggest thing is that we are no longer part of the EU, and therefore, despite some of the assertions, there may not be trade tariffs or duties in most instances, but there is not necessarily unrestricted free trade. So those friction and trade barriers do exist with the EU. And of course, that leads to cash compliance risks and supply chain blocks. And I put that in bold there just because those are the things that businesses are facing today. They are looking at the media purporting different delays, 2 to 3 days in some cases, ordering small goods. A lot of businesses unsure exactly what to do. And in some cases, businesses have stopped trading with the EU or stopped exporting in the meantime. So, you know, those are the significant issues that are being faced. And of course, the 24th of December last year, the free trade agreement was signed, which sort of hopefully ironed out some of the issues. But of course, VAT being the number one thing that we're here to speak about today is still a big cost that needs to be absorbed. So how do businesses deal with that? So the free trade agreement is just one element of your post-Brexit trade. And then of course the UK now trading as a sovereign state, conducting our own affairs, it is a third country outside of the EU. And that, of course, adds some complexities around the supply chain, but really impacting that in a lot of ways. So something that I just added here as well is just a very high level, and I'll touch on it very briefly, just around VAT expenditure. The important thing is where businesses, where Brexit has impacted businesses significantly, who do trade into the EU, who do send people to the EU, who buy and sell goods from the EU all the time, there is VAT elements and VAT expenditure that is recoverable, that allows businesses to not have to spend a lot of money on their transactions, or at least to be able to reclaim some of that money back. So just very high level, I think the important thing to point out is those three bottom lines is where the UK was part of the EU previously, that intra-EU trade allowed a lot of digital transactions to take place. So businesses who wanted to reclaim their VAT and their amounts spent on sending their employees, on really moving around the EU quite easily, were able to do so quite simply through a series of electronic portals. And unfortunately, what's happened as a result of Brexit is that has moved away. That simplicity has moved away. And the UK, being outside of the EU, is now subject to what the US and any other country to submit documents that are original tax certificates. And Gabrielle will talk about reciprocity later. But really, those relationships that the UK now has with the EU kind of govern that. So where the UK previously took advantage of a lot of very simplified VAT reclamation simplicity on their transactions, that now no longer exists. So businesses thinking about just working in the EU, not even sending goods or selling services, really need to consider how they do that, and whether there's money lost, and it speaks to that friction and that sort of cash problem that businesses will face. Suddenly we are faced with an extra 20 to 25% of costs on transactions and on trading, and that's the potential, that's the VAT element that we're seeing a problem with. So very just to touch on the free trade agreement, looking at highlights. The idea, as I said earlier, removes the trade barriers, zero tariffs and quotas. The second point there, the rules of origin and requirements, and we were talking just before we began the webinar. That removal of tariffs and quotas, that's not necessarily the case. Obviously, it depends on understanding what your supply chain looks like. Where are you getting your goods? Where are you selling your goods to into the EU? How are you trading? And whether or not you actually take advantage of those zero tariffs. And for the first time in a generation, businesses need to consider, well, actually my supply chain is something different. I know the EU has a free trade agreement with other countries. Does it apply to me as a business? Where am I buying my goods from? Am I in the textiles industry, importing things from the Far East? How does that impact the manufacturer? So that's something that businesses really need to grapple with. As to how that affects paperwork. And I think some of the stats are that there are, I think it's 275,000 pieces of paper that were flowing in the first month or something related to customs. How does that impact your business as well? And then two other elements. I think fisheries, I'm not going to bore anyone with that. We all know, that's just part of the friction. It's what's going to happen in a few years' time. And then, of course, how the UK was able to divert the issues of these words of dynamism, etc. So we're going to see a review of this agreement within 5 years. But these sort of topics which come up for the UK and for businesses are going to be constantly evolved and identified and sort of antagonized and looked at, and really everyone's going to look at it with a magnifying lens to say, how can things improve? Or will we see some issues that we're currently facing with the EU, as we see through Northern Ireland and the issues even today being announced, a sort of delay on some of the import checks. So these are the things that really sort of govern the situation where we find ourselves. And again, I'll go back to that VAT element. That's the cost. That's the thing where businesses need to really watch out. So as I said there, crucially, the free trade agreement doesn't eliminate non-tariff friction. So, what is that friction? And very briefly, obviously, financial services, a lot of businesses, are really struggling to understand. In March, I think we were supposed to see some movement. What is going on? Why is there going to be equivalence? Are accountants like myself, are we going to be able to work in the EU quite easily? Professional services, are we going to be recognized? And then, of course, those hold up at ports, etc. So we're starting to see things a lot better. I think there were some surveys out saying that businesses are seeing 2 to 3 days delay on both sides. So these things are in the press as well. But it's just all impacting the environment and impacting how businesses think about trade. And I think the important thing there is that businesses are stopping, in some instances, from delivering goods and exporting goods to the EU because there are all these different holdups, these delays, the VAT, the amount of paperwork. And those are the sorts of things that's really where businesses need to consider what are their priorities? How do they get to market? What do they want to do to get to market? And is that holding up their supply into the EU, or can they find a domestic market? So it's going to be a very interesting time over the next few years as we see what it does to trade, and obviously as we come out of COVID, what does the trade look like post-COVID when businesses open up again, and how that impacts any future relationship with the EU. So just looking at the trade compliance considerations, I'm going to hand over to my colleague, Gabrielle. She's going to start talking about the crux of the matter, the VAT, the compliance, and all of that. And then we'll take time for questions later.
Hi, everyone. Lovely to be speaking to you and to actually see some faces. Normally, when we do these webinars, I'm just usually looking at myself in a tiny little picture. So lovely to get some change there. But thank you so much, Mark. And leading on from what he says, I think the real complexity around Brexit is navigating, what this big word is called compliance. And ultimately, when you're shipping goods, compliance is super important because that's the thing that is going to prevent you from having your goods impounded and, receiving these additional fees and demurs and impoundment and potentially opening yourself up to penalties if an audit were ever to be carried out on the business. So ensuring trade compliance is super key for businesses now that we've left the EU, and each of the trade compliance considerations need to be looked at really on a country by country basis. So that's definitely something that we would like to do, and analyze and understand the supply chain to see whether or not these different things affect you. So I'm just going to go through these list of things and just kind of high level explain to you why they might be required and why they're so important. So in terms of VAT registrations in new countries, these might be necessary now for trading because we have to consider where sales are being made. And if they're being made in a foreign country, as we have now left the EU, we cannot benefit from the simplifications we used to in terms of VAT and in terms of making sales and therefore shipping goods. And a place of supply just is technically a country and whereabouts that actual sale would take place. URI numbers, I'm sure you've all heard the word URI numbers, but these are even more important now because what we're seeing from our experiences, a lot of businesses are currently still only utilizing their GB URI number. And unfortunately, that's not going to assist you in getting goods into the EU. This is very much your passport to allow you to, clear customs, get the goods into the EU seamlessly, efficiently, and as quickly as possible. And also, ultimately, if anyone is shipping goods DDP into the EU now, this is a significant requirement and could potentially be a reason as to why goods are getting held up. Shipping and customs is driving everyone mad. As I said before, you're now dealing with essentially 27 different clubs. We're no longer benefiting from being part of a single market and goods being able to be cleared in exactly the same way. I mean, we didn't even used to have a clearance process. So this is very foreign and very new for a lot of businesses, and understanding the different requirements on a per country basis could literally be the difference between, losing customers and not, because each country is now requiring different things. And to go a kind of a level deeper, different freight companies are even implementing their own take on the rules of what they will and won't carry out for the clients that are shipping goods. So it's very interesting, and you do definitely need to consider all of these things. And this, I think, the main part of understanding trade compliance really does boil down to Incoterms. So actually understanding whose responsibility it is at each point, because there's this whole new requirement that businesses have to consider. We just need to ensure that the actual relationship between the customer and you as the seller is understood to know exactly whose responsibility it is at each point. Can we just pop to the next one, Mark? What I want to do, just really high level, I don't want to get into the detail of it, but I just want to give an overview of a pre and post-Brexit world to try and give you a bit of an understanding as to why potentially there's all these challenges and changes. So obviously pre-Brexit, when we were delivering and selling goods into the EU, there's two elements we usually tend to consider when we're shipping goods, and that's the sale of the goods and then the physical delivery or movement of the goods. So the sale of the goods between the UK and the EU beforehand usually was zero rated. So this used to fall under something called intra-community supply, which essentially pushes the obligation on the buyer to account for the VAT on that transaction. In the majority of cases, the buyer would always kind of know to do this. This would result in this zero VAT invoice being issued to clients. And then on the physical movement of the goods, they weren't considered an import and export because we were all part of the single market. Goods were moving very easily, seamlessly. No customs was required. There was a free movement of goods. Fast forward to today, however, that's no longer the simplicity that we are all experiencing, unfortunately. We're now considered non-EU, so technically local sales might be occurring in all 27 EU countries, but we're obviously not, VAT registered in every single EU 27. So we now have to consider whether or not we can take advantage of simplifications, which we can in some countries, which means that we don't need to be VAT registered. But in other countries, businesses will now require or potentially should consider getting VAT registered in certain countries because they are seen to be making taxable supplies there. So that's just one side of it in terms of the sales, but it does go a level deeper because we now have to consider the way that we're constructing invoices to provide to our suppliers, ensuring that the commercial invoice is reflective of the value and so on. So another element that I'm sure everyone on this call probably has been experiencing in terms of delays and issues and challenges is the actual physical movement of the goods, the good old customs clearance. We now unfortunately have to consider these goods as exports from the UK and imports into the EU. So now there's this quite laborious task of clearing customs, appointing a customs agent, getting your documentation correct. There's masses of documents that are now required, potential EORI numbers, import VAT payable, duties payable. I mean, the list goes on. You've got your commodity code you've got to get right. You've got to have certain licenses, certificates. So it can be quite a labor-intensive process for anyone involved. And we've got to get it right to ensure that the import VAT is recoverable. And ultimately, now we're shipping goods. That import VAT has to be paid somewhere, has to be deferred. Something has to happen to that import VAT. So that is why the compliance is super key to ensure that we can recover that cash flow burden that someone has to provide at the point of customs. Should we just pop on? So I think this is the next slide in terms of trying to keep your clients happy after Brexit. You do have to consider potentially a supply chain transformation. We have to look at the full supply chain and analyze it to ensure that it meets the requirements of your customers and businesses in the EU as well. You have to look at kind of short-term goals, but also long-term goals. So there has to be a solution that works for all elements and ensures that it's cost-effective for yourself and the client. You're ensuring compliance because, as I said, penalties can be huge, up to 5% of turnover. So it can be quite a big impact if it's not carried out correctly. And obviously the supply chain has to be efficient. Businesses are really going to suffer if they're not getting goods across to their customers in the same timely manner that they did before. So I think this is really, really key to just digging into the supply chain to understand exactly the process. So I want to briefly touch on Incoterms and shipping, because as I said in the kind of initial part of the conversation, this really determines whose responsibility it is at each point. So the two most common that I've spoken to people about are DDP and DAP. So DDP being delivered duties paid. It's where the seller assumes responsibility of the whole shipment. They clear customs, they pay the import VAT, and they pay the duties. And ultimately, they get the goods to their customers in exactly the same way as they did before Brexit. And this is why we're seeing this quite a lot, because it obviously gives a lot of companies kind of a competitive edge, especially when you're dealing with local competition in the EU. When EU businesses now deal with other EU businesses, they're not feeling the same sense of admin. They don't have to appoint a customs agent. They don't have to pay import VAT. They don't have to pay duties. So DDP kind of puts you in a stronger position. Yes, of course, there are cash flow implications, but you can ultimately claim that import VAT back, which a lot of companies don't know. So DDP is definitely an Incoterm that I'm seeing a lot when I'm speaking to people, and it obviously gives you that competitive edge. Having said that though, DAP is another one that we hear a lot, and we work with a lot of people. This is where the responsibility changes at the point where import is happening in the EU, which means the buyer actually assumes responsibility for clearing customs, paying the import VAT and the duties. They have to, in some cases, they have to appoint their own customs agent, carry out the checks on the goods, and sometimes it can kind of slow this process down. So, as I said, there's obviously these two main ones. I think there's about 11 Incoterms in total. All have different benefits, and all have different and also have kind of different areas where it can be quite challenging for a client. So ultimately, at the end of the day, import VAT has to be paid at some point if it's not deferred. And it's just a consideration. It needs to be a consideration to ensure that someone's paying it, and whoever is paying it, the only person that can reclaim it is the owner of the goods. So that is super key. HMRC have recently released an article saying that they are aware that a lot of people are reclaiming import VAT when they're not the owner of the goods. And this is obviously non-compliant, and it's putting a lot of people at risk. So I think a lot of these customs clearance and government authorities are obviously dealing with a massive increase in the actual clearances that are happening, and it's hard for them to keep an eye on everything that's going on. But what we do expect to see over the next few months is a real ramp up in terms of them actually finding out when people are claiming import VAT when they're not the owner of the goods. And that can obviously throw a lot of penalties and additional audits, which no one wants either. So the financial considerations that everyone has to have is obviously the import VAT. Someone has to pay it, and it is a recoverable expense. You just need to make sure that everything is compliant, and also that the documents, when clearing customs, are consigned correctly. If these documents are not consigned correctly, it's going to be super difficult for anyone to recover the import VAT. This is so important, and this can be the thing that ultimately, leaves a company with quite a pinch on the bottom line. Additional staffing, obviously, we see a lot of companies that are trying to navigate and understand what Brexit means and what each country wants. And some people have to hire experts and specialists, and it can be quite a lot. So we generally tend to see this a lot. Obviously, there's companies like Retrade out there, like myself and Mark work for, where we can help companies navigate this minefield and hopefully come up with a solution that's VAT compliant and works for you. There's obviously other costs that need to be considered if VAT registrations are required, fiscal representatives, there's customs clearance charges, and so on. So I think from my point of view, I think the key things that you really need to think about is analysing your supply chain, is understanding exactly what is going on. And as I mentioned before, at Retrade, we're more than happy to do that with you, to understand whether VAT registrations are required. Are these documents being consigned correctly? As I said, this is so important. If your customers are paying it, if you're paying it, if they're not consigned correctly, the government has a right to turn around and say, we don't owe you this VAT. These documents have been filled in incorrectly. They say, Tom's name rather than Mark's name. So it's quite a big pressure on businesses to get this right, because ultimately it can end up with a significant pinch. I think as we've popped down here, this is super key, because you need to understand who's clearing customs and whether the clearing agent is aware of the requirements in that country. Export and import clearances now are way more complicated than it was before. And then there are obviously, chambers that can assist with this if this is becoming quite an issue for companies. This is also, all of these points are key, but audits is obviously something that businesses of all shapes and sizes can face. I know that what we see a lot in the news, in the media, is these large organizations and enterprises that are the ones that have been audited and they've been caught out and they've been issued fines. But I just want to stress that this can be any business of any shape or size. So being audit ready is something that should be on every business's mind and should be at the forefront, because it's something that could get flagged at any point. And I think for me, the reason why I love doing what I do as well is just to make sure that we're marrying everything up, helping businesses navigate in terms of actually shipping the goods, clearing customs, getting their goods through, but making sure they have VAT compliance is so key. We have to think about the short-term objectives of getting the goods to the client as quickly and as cost effectively as possible, but also ensuring that you are continuing to trade in a European compliant way. So this leads quite nicely into the solution that we've created at Retrade. As we mentioned previously, Mark and I both work for the company that's powered by a larger VAT recovery business. We assist companies with a one-stop DDP solution, which allows them to, as I said before, kind of continue trading with the EU and getting goods to your doorstep in exactly the same way as they would before Brexit. I've spoken to so many people that, obviously with the import VAT being as expensive as it is, they want to ensure that they can get it back, but they also realize that by them controlling the narrative, they win buying power, retain client and ensure client retention, but also, so many people have said the cost of doing business is obviously going to be less than if you lose, customers completely in Europe, which in some scenarios we've heard of, because goods have been impounded for 8-9 weeks and they're just not receiving them. So our solution just ensures that those goods get there by you controlling the narrative. We assist with VAT registration and structuring of relevant invoices, filings if they're required, compliance checks on documents, physically moving the goods from A to B, ensuring that customs clearance process is super seamless and efficient, making sure that all the documents are correct to ensure that you get that import VAT back, and ultimately procuring those documents as soon as possible to ensure that when we're actually getting that import VAT back for you, it's not so much of a cash flow burden, because it's coming in repeatedly every quarter without fail, or being involved in your monthly filings if you require the registration. So it's not feeling as much of a cash flow impact as it was before. Pop over to the next one. It's probably also worth me mentioning at that point as well that you actually don't need to you don't need to always have every single element of the solution. We obviously, as I've mentioned before, want to analyze individual supply chains. So there might be one or two parts that are more applicable than the other. If you are just incurring import VAT, or if you have incurred import VAT over the last 3 months, which I'm sure some of you have, you are eligible potentially to recover that if everything is correct, and that's where we can step in. So this just highlights the fact that what I was saying about analyzing individual supply chains and trying to come up with a solution that meets the needs for that client. So this is just showing that, potentially we've worked with clients where we've created almost an EU hub to clear goods into that one country and thereafter allow those goods to move in free circulation. So in essence, you make a sale to yourself in the EU and then you sell on to your final clients. This reduces the VAT that they potentially have to pay in the actual payment. You incur the import VAT in one place and we can recover that as effectively and efficiently as possible.
So Gabrielle. Thanks very much. I think for businesses who are attending this webinar, I guess across the UK and obviously the EU, the things that are popping to mind, the points that they're reading about, the terms that you've mentioned now: VAT registration, VAT returns, VAT reclaim, VAT compliance. It's a lot of VAT, import VAT, Incoterms. These are all costly. These are all costs that businesses suddenly have to incur. And the list goes on there: shipping logistics, importer of record, EORI numbers, fiscal representatives. All of these things are potential admin burdens or additional things that businesses need to consider when trading into the EU. And going to the very important point that Gabrielle said around what do businesses do in order to get their goods to market to avoid losing customers. And we know that some businesses have stopped exporting, but is it that they would rather send rather send goods through Germany because they could fly them there, but then you might have issues with importer of record. So there's a particular burden in that particular country. Or would you rather go via freight into France because it's the shortest amount of time on the road, but then you've got other issues because your end destination is in Eastern Europe. And all of these things come together to determine what's more important. And then of course, who's going to suffer that extra burden? Who's going to pay that additional cost? Is it going to be you? Is it worth having that additional cost to reclaim? So there's a cash flow impact, but then that you've kept your customers happy, satisfied, that they're not going anywhere else. And I think this is really the key as to where businesses are struggling to find the information or to understand what they need to do to their supply chain. So, we put those keywords down as to where businesses are thinking about these things. What do I do? How do I incorporate this into my supply chain, into my sales process? And then on the right-hand side, it's just about looking at the EU 27 countries. What are the type of businesses and questions that one would ask themselves, or chambers like the Cambridgeshire Chamber of Commerce to find out, from members, what are the struggles that they're having? And I know that the chamber gets a lot of questions around VAT, a lot of these issues as well. So what are the types of things that are being asked, and especially around DDP shipping too, is the buzzwords of who's owning the goods, where are they? Are you selling them to yourself, or are you sending them to the end supplier? And then I think Amazon as well is a big issue. Amazon opening up their another fulfillment center hub in Ireland, in the Republic of Ireland, and these sort of things are continuous. And so where do you go to solve the problem, as well as how do you minimize those costs? So that marrying those things together. And so, from our side as Retrade, and obviously we try to provide a high-level overview of the different things to consider. We do offer a service which aims to assist businesses in dealing with all these issues. As Gabrielle said, whether it's just looking at the compliance side, whether it's looking at the import VAT, so that cost saving, or whether sitting in between. We've had instances where freight forwarders and shipping companies are doing things differently, which don't allow the import VAT reclaim. And so it's about how to manage those processes and deal with those issues to be cost effective for businesses. And we offer a free consultation for any business who wishes to sign up. Obviously, as a member of the chamber, of the Cambridgeshire Chamber of Commerce, we offer a free consultation to members. So I think we'll open the floor to some questions now and be able to answer them, hopefully with some detailed information. But that's also an opportunity. And I was telling Ollie earlier, we'll send out the slide deck so everyone's got it to the chamber so that they can pass it on as well. So I think, Ollie, if from our side, definitely open to some questions. Hopefully there's some interesting ones that we can be able to assist with.
Absolutely, yeah, and thank you very much indeed. I mean, it's a minefield for most businesses. I've been looking. We're a SaaS software company, so what does this mean to us? And there's going to be all sorts of legislation we're going to have to walk through, especially when we start looking at data centers overseas and all sorts of things like that. So yeah, really appreciate your time. There was a question from David in the chat. David, I don't know if you want to walk through this with Mark and Gabrielle, but it's really around EORI numbers and whether or not you need a registered business address in the EU. David, if you're available, want to come off mute, that would be awesome.
Hiya. Yeah.
Hi, David.
David.
Yeah, I mean, we've reached the conclusion that it would just be easier for us to set up a branch in Holland than get an indirect representative. You seem totally beholden to them. And what I understand is that the local authority gives them an allowance of how much they can declare for or everybody they're representing, and pretty much most of them are already maxed out of that allowance. So,
okay. So again, this is quite an interesting one, David, because whereabouts, I mean, I'd love to dig into this in more detail, but whereabouts are you shipping to? Because you've mentioned here on this question that in order to get an EU EURI number, you have to have a registered.
We've got all that. We've got that. We've just had goods in France for 4 weeks.
So again,
we've called it back.
This could be a number of different issues. And what we'd really like to do is dig into the documents. You don't always need to get that registered or have a physical presence in the EU, because these simplification measures are in place to prevent that happening. So France is, as an example.
The German tax authority told me, and it was the German tax authority that told me directly, that unless I had at least a registered branch in the EU, me owning an EURI number would be pointless.
So the German tax authorities have, they are a little bit stricter when we ship goods into Germany. So there are different requirements, and they have, again, as I said, it's all about having different sets of rules per country, but moving goods into France shouldn't be as difficult into Germany. I do fully agree with you on the German point. It can be.
We've had to call our stuff back from France. It's been refused. 4 weeks it's been sat there.
Okay, can I jump in? I think that raises a good point. What we found, and this is where the legislation, the agreement, as well as the actual practicalities on the ground. And David, you're saying you have to call your goods back. We've noticed that in Germany, particularly, certain EU countries have requirements that maybe fall outside of the agreement or outside of the EU as a whole. And so we're seeing that whether you go into Germany or France, you actually may face something different. And I think setting up a company in an EU jurisdiction can work in some instances. But then
it's only a branch, it's not a full subsidiary.
But there are other costs, of course, involved potentially in that. So accounting, admin, those sorts of things. And that's where businesses have to now suddenly say, in your case, it may be cheaper to do that from the other admin, but other businesses on the other side, might open up an actual company. And that comes with income tax implications and a whole lot of other things. And this is the problem that we're facing. And then, of course, you've got your goods having to be pulled back, and I think that's probably the worst case, because how do you get into market?
The whole affair has cost us about £2,500,
which is probably not the point of a free trade agreement, or the financial impact of Brexit. And what we try and do, and obviously our solution, well, our consultancy and our solution isn't going to help every single business, but what we try and do is look forward as well to restructure, to say, well, actually, maybe this is the most cost efficient or time efficient way of getting goods to market. There may be a cost anyway, but this will be the lower cost of that. And if there's any import VAT, can we look at that as well?
Okay.
We definitely welcome a discussion on this point, though, David, to dig in a little bit deeper, have a look at some documents potentially, and try and alleviate the pressure.
Yeah, I've been told the Dutch are just completely ignoring that item of the customs code. They're fully aware of it, they're just ignoring it. So that if you want to ship into Holland, go for it. But Amazon haven't got they don't have an FBI warehouse in Holland, so it won't work for us.
No.
That'll be the difficult. If they set up an island, are there now going to be 3 different islands, let's say, to move goods to? So what does that look like? There is no solution, and you've touched on 3 countries with 3 different problems in the EU as one whole. So how do you manage that?
Yeah, I know. So it's difficult.
There's a comment from Andrew in the chat as well to say that we're really struggling to ship to an Amazon fulfillment center in Germany. I mean, this is compounded by inbound supply chain delays as well. So, from Mark, from your perspective, and Gabrielle, how do you start to unpick this? Because it's a lengthy procedure to really try and reformalize how somebody looks at their import and export processing, right? There's a lot to this puzzle. Cash flow is one thing. How do I get goods to countries is another, but also, if you're importing, delays and processes around that, how do you navigate those processes?
Absolutely. I think you've hit the nail on the head with those things. This is the whole reason and rationale to analyzing it from start to finish and understanding everyone's objectives and requirements, because there is so many different moving parts to this machine, and we just have to ensure that when we come up with a solution that it fits the bill, in essence. And, you know, as David mentioned and alluded to when he was speaking about all these different countries, is unfortunately, if we want to be trading in a certain way and get goods to the EU, it might be that there's not even a one size fits all within a company. There actually has to be 3 different ways of shipping now. And that's unfortunately just, you know, one of the outcomes of Brexit.
Yeah, for sure. There's a question in the chat as well from Andrew around, can anyone help with being, you know, an importer of record, essentially?
Yeah, I mean, IOR services is definitely, you know, an area where we can assist, or we can point, you know, a company in the right direction if that's not something that we personally can assist with. But this is a big thing, because importer of record obviously defines who can, you know, reclaim the import VAT. So it's, especially when you're dealing with Amazon, who I know full well, you know, are outright saying to every single business that they work with that they will not be an importer of record. So it can create a lot of difficulties. So we can assist hopefully in that area.
And in terms of if you're going to export to the EU and take care of the data processing this end in order to simplify the consumption of goods the other end, what sort of overheads and margins are you seeing businesses having to kind of cater for that additional paperwork and, you know, that additional admin? Is there a metric that can be applied, or is it purely case by case?
I would say case by case, because you've obviously, you know, when you think about moving goods, there's so many different things to consider, but, you know, you even boil it down to how much is being moved and the weights and dims of something. And, you know, that can affect the value of the goods, that can affect the import, that can affect the customs, the documents, and it's all resource as well. You know, you are spending time sorting everything out and putting these commercial invoices and packing lists together. So it's very hard for you to kind of unfortunately stick, you know, a percentage increase that we would see, because it can be almost defined in so many ways.
What we are seeing is small businesses are the ones that are really suffering. Small, I mean, SME in that, but small SMEs that don't have the larger margin opportunities or the longer cash flow lead time, and they're the ones that are really suffering. And it will be interesting, I guess, in the year, probably by the end of this year, if statistics, you know, are released as to really itemizing how many, or identifying how many businesses are taking on full-time employees, and the government are offering obviously those incentives. I think £2,500, and they're coming up, and there's some other schemes as well, you know, that they're offering training, etc. But that's all impacting, that's time, and that's all costing businesses money as well in terms of their normal trade. From our side, you know, the small businesses we're seeing on the full spectrum of shipping, but for a lot of businesses, if you put the VAT alone, if you want to look at the costs, for businesses that are exporting most of their goods, that's 20 to 25% that they would have to suffer upfront, and that's probably their biggest cost. You know, hiring someone full-time, etc., are the admin burdens along the way. And so we've seen some significant costs where businesses have suffered, and, you know, trying to help them on that.
I'd say as a result of that, David, just going back to your scenario a second ago, does that now mean you're pulling back from looking at exporting to the EU, or is it just a holding pattern until you understand, you know, what you guys need to do to make that a simple process?
The business is there, but we really felt, I mean, we spoke to our VAT and tax experts this morning, well, someone that we've been put in touch with, and we've roundly come to the conclusion that a branch for our company would work. We would get it to do import, we would get it to do the import administration, and also represent us in terms of CE legislation. Because what I don't understand, when you say compliance, do you mean that at the EU border, we should be sending all our CE certification for all our products?
I think that's not No, not entirely.
Because I've been importing from China for over 20 years and I've never had to do that.
No, not entirely. What we mean by compliance is ensuring that if the VAT man or the tax authorities come knocking on your door and saying, oh, you've been doing business in France, can I see the evidence? Your evidence doesn't allow you to do that business in France. Then they're going to say, hang on a minute, you owe us X amount in penalties. We're also going to open you up for a full audit.
Yeah.
So compliance means, reducing those risks of penalties, reducing the exposure to an audit, but also ensuring that if your goods are at the French border, for example, then they say, okay, show us the evidence as to why you can get these in, show us the proof of purchase, just making sure that you've got all the boxes ticked and reducing those, that exposure to quite significant penalties as well. I mean, as you said, the goods have been impounded for weeks and the mules cost a lot. So...
Well, yeah. I mean, the honest truth is, I actually don't know if they have been impounded or not. DHL they've not really been telling us a lot, and I've just called it back now.
So exactly, and this is the other thing.
It's been in a permanent clearance event for the best part of a month. And they haven't got in contact to say that there's problem A, B, or C with it, or that it's fine. They just haven't said anything. So... actually, DHL made a mistake. They let one carton of the 27 through, which got to an Amazon warehouse, which they checked in and accepted. And the rest have been with DHL for so long that Amazon have actually closed the delivery now. So even if they did get through, Amazon wouldn't accept them. So it's just...
And David, that's what we've been seeing is that inconsistency. One of our colleagues who's very fastidious in phoning and being in touch with some of the freight forwarders, is seeing that either in some cases the goods are going through, but then the documentation for the other areas of what, as Gabrielle outlined, the compliance hasn't been done correctly. But it's fine because the goods can flow through, so that part doesn't matter. And saying, it's up to you as a business to deal with it. That's some of the responses that we've been getting, which is not ideal, obviously. And then on the other side, just as in your case, just not sending the goods through, but not speaking, not updating, and it really raises the concerns as to, are they fully because of the complexities and the changes, and because it's only been 3 months, has anyone caught up 100% with what is happening? And so those are the examples exactly as we're seeing, and you raised it again here. So it's another unfortunate war story to tell of this, but hopefully these things can be ironed out.
It seems extremely difficult to me because you phone up your courier companies and they don't know either. Like they're everybody's searching for answers that nobody seems to know. It's frustrating.
I think that just compounds the issue further, right? Because if you were given a direct answer to a question and were able to then mitigate it, then it would make life a lot easier, right? The problem is it just falls into sort of no man's land in terms of whose responsibility it is and what the next steps are, etc., etc. Mm-hmm. Is there anybody else that wants to ask any questions while we've got Mark and Gabrielle here today? Gonna go with the 5-second rule on Zoom. Mike, do you have a question? Awesome. Okay, I'll go with the 5-second rule. Thank you, guys. I know it's an incredibly complicated subject. Hopefully, in the next few years, things will start to flatten out. I know from conversations with other businesses that I've spoken to, it's a minefield, and it's an investment, and it's working out whether or not that investment should be there for them in terms of their exporting and various other things. From our perspective as a SaaS supplier, we're looking into whether or not moving into Europe makes sense. And it depends on where the software resides and all sorts of other crazy things like that. So there's a minefield for us to go through. John, I know this is a subject that's been very close to your heart for quite a long while now. We were talking a little bit beforehand about some of the other challenges as well. From the Chamber's perspective, the last 12 months of, from an export side, the Chamber's been there to support businesses. I'm just wondering if it's worth just letting everybody know the services they can expect as part of their Chamber membership.
Yes, thanks, Ollie, and of course, thank you, Mark and Gabrielle. This is a very complex subject, particularly for those of us that are lay people trying to look at it and understand it. I think we all have to understand that the detail of it wasn't done until 48 hours before it came into effect. So it hasn't given people a lot of time to really be able to plan and look and see how that this can impact on them. And particularly when we hear, from Mark and Gabrielle that, people do need to perhaps have a comprehensive transformation of their supply chain, and they need to look and understand how they deal with it. I think the key thing is that the point of obviously getting everybody together today is to try and supply how we can actually work together to deal with these issues. And the key thing is that it's not a panacea for all ills that anybody can find out. You can't look at the websites, and despite the government having all the different websites and links and everything, it's really a minefield to try and get through, and you don't necessarily get the answers, and regretfully sometimes you get conflicting answers between different websites. So I know and understand it. That's why I really wanted to work with Mark and Gabrielle, because the key thing is what we wanted to do was provide people with an opportunity for a free discussion with them about their own particular challenges, so that they can look at the individual cases, because this is really something that has to be looked at on a one-to-one basis. So I'm delighted they've agreed to be able to do that, and we'll obviously have the contact information for them, and we'll send that out with the slides. Sadie, who is with me from the Chamber, has kindly put on the chat about the services that the Chamber offers, and the paperwork and the documents that we can provide, and the assistance we can give through our international trade team, and the contact number is there, and obviously the Chamber through the website, you can get that information. And I think all of us and the whole team that we've got all working together to actually provide practical help and advice to enable people to continue to do the business they so desperately want to, and have been able to do for such a long period of time without any hiccups. And we need to get back to be able to deal with that, and making sure that we look at how we deal with the supply chain and how we can deal with it. And from what Gabrielle said, there's different solutions to different areas, and maybe within a company it's not all doing it through the same particular process. But I do really feel that everybody's really focused on this, and it's really frustrating, the stories we hear, particularly in the way the freight forwarders and the companies are dealing with it, the challenges of goods getting stuck. And David's obviously illustrated that for us today in real terms. But all I would do is just say to everybody, the Chamber is there. We've got an international team, very pleased to help and guide as much as we can, and provide the various documents and information you need. And clearly with Mark and Gabrielle, their contacts, so that they can have a free consultation with you to really look at and understand what is the best option for you to be able to deal with your supply chain and get it up and running smoothly again, and obviously trying to minimize the additional costs that will impact on you. So thanks everybody for being with us, and thanks Mark and Gabrielle in particular, and of course Ollie as always, who chairs these events for us, which I'm very appreciative of. So thank you, and I'll hand back to Ollie. Thanks.
Thank you, John. We will 100% make sure those contact details get shared, Mark and Gabrielle. Thank you very much, and also the deck, and also the recording. Just before we wrap up, a slight change of gears. So the marketing session on Tuesday morning at 11 on how to make your website an asset, and also next week on the HR leadership, we've got outplacement versus wow placement. And if there wasn't a title to try and understand what that means, hopefully I'll see some of these faces at 10 a.m. on next Thursday. In the meantime, as always, thank you very much for your time. Really appreciate it. Thank you very much again, Mark, Gabrielle. I'll certainly be reaching out because I don't know what we're doing. I'll be honest. Thank you very much, and have a good rest of your day. Thank you.
Thanks so much.
Thank you, everyone. Thanks, John.
Thank
Bye.
you. Goodbye.
Bye-bye all.
Thank you.
Bye.